welcome back to the Block Fuel Podcast. I'm your host, Avi Mash. Alongside me is my co-host, Jody and Sean Ristau, who is the third co-host that we are bringing on to a lot more of these episodes. And we have a special guest here today. We have Jim Knox over at Aon. And so Aon's massive organization, for those that don't know, 50,000 plus employees across 120 different countries. And, risk mitigation is what they're known for, of course. And so the first question, we're all wondering is, how are you guys involved in blockchain? But before we even do that, I know you have quite the background, different industries that you've worked with in the past. So I want you to just quickly introduce yourself, Jim, share a little bit about some past experiences you've had and what, attracted you to Aon, and ultimately, what are you guys doing in the space?
Yeah, sure. Thanks for that, Avi. And great to meet you all. Thank you for the opportunity to speak today. Just real quick comment. I'm speaking on behalf of myself today, not Aon. So just put that out there. So Avi, very simply, my background, a former attorney by trade. I was a New York City prosecutor going back many years ago, then went to work for a large insurance firm in New York City. Sorry, large law firm in New York City. Was there for a while and quickly determined, law firm life was not for me. So I then pivoted to the insurance industry about 20, 25 years ago, where I've been ever since. And then to bring us up to speed on blockchain and digital assets, I joined Aon about 15 years ago. And I was very blessed at Aon. I had a phenomenal boss back in the day. And someone had said to me, "Hey, Jimmy, there's this thing called Bitcoin. Don't know much about it, but you might just want to look into and check into it." And there was a conference in San Francisco. This is going back about almost 10 years ago now, Avi. And I went to my boss back then at Aon and said, "Hey, I heard about this thing called Bitcoin. I think it might be worth checking out. Can I go to this conference on the West Coast?" He said, "Yeah, sure, Jim. Pursue it and see what's there." So I went out to the conference on the West Coast. And, if any of you fellas have been in the space for a while, if you remember back in the early days, it was a bunch of crypto bros. I go to the conference, almost every guy at the conference is wearing a baseball hat, backwards, some of them. Well, I know, Avi, you look good in the hat, though. And a number of these fellas had shirts that had really negative comments about capitalism and things of that nature, right? And this is going back about 10 years ago. But I came away from the conference, I said, there's something to this. There's something to this blockchain. There's something to this. It's going to have legs. And I went back to my management at Aon and spoke to them and said, "Hey, fellas, I think there's something here. I'd like to pursue this." They said, "Fine, Jimmy." So I started to send out some cold call emails to some of the companies in the blockchain space. I think, Sean, you might have been one of them a long, long time ago.
Yeah.
And to my complete shock, some of them responded, said, "Jimmy, come on in." We did very early back then. We had some insurance solutions for some of these companies. We were putting out their protection insurance for hot wallet exposure, and cold wallet, cyber, and some other areas where these companies in the blockchain space, where they had some exposure. And it really just took off from there about 8, 9 years ago for me personally, working now with some of the biggest companies in the industry, globally. And it's been a real fun ride. If you take a step back, you look at blockchain, you look at the digital asset space, you can just see some massive future for the industry. Whether it comes to digital assets, use of digital assets, whether it comes to NFTs, whether it comes to smart contract audits. Now we're talking staking and slashing and things like that. So, what started out as a very nascent industry 8, 10 years ago, with the whole ICO phase and all that going on many years ago, you can see, guys, how it's just matured and grown. And I think we're still at the very beginning of this industry. I think there's a lot more movement to go, a lot more growth, a lot more scaling. So it's a lot of fun. It's been a really fun ride to date so far.
No, that's great. I mean, let's just dive right into it. On the in your background, honestly, Jim kind of goes hand in hand with this. I mean, just this week alone, it's kind of not on the insurance front, but it's more given you have the legal background. You saw the SEC give Uniswap a Wells notice. It seems like the industry's kind of shrugged that off. Like they don't even, it's like, kind of like part of playing in the sandbox, if you will. But what are your thoughts on that?
Yeah, it's a great question, Sean. I think you're spot on. I don't know if the industry has totally shrugged it off. I think they're kind of numb now to the daily infliction being, given to us by the regulators. But let me take a step back. Regulators are going to regulate. That's their job. I don't blame regulators. And I know that regulators get a lot of bad press in the industry. Regulators are going to regulate. I think what's missing is, and I said this repeatedly, we do not have our MiCA moment, meaning that in Europe, you have these MiCA laws which give people and companies in the space, in the digital asset industry, it gives them guidelines, guardrails in which to work.
Right.
For the most part, we're completely lacking that. So what happens? So regulators are going to regulate with the laws that we have in place. What are the laws? Well, you have the Howey test, a 60, 80-year-old Supreme Court decision that's giving guidance on an industry that was never envisioned, right? So that's what we're dealing with. It's regulators are going to regulate. I don't blame them. We don't have, Congress needs to step up, Senate needs to step up and start giving us guidelines to work with. That's my view.
Yeah, and unfortunately, I mean, we're in the middle of an election year, so we all know how that goes. I mean, we're not going to probably see much of anything. You have, without going into specific names on the political side, you have some very against, obviously, digital assets and some that are very for it. And I think, to your point, there needs to be some common ground that's really found there.
I think what's going to force that, Sean, is as the industry continues to grow and as more industries, industrial and institution come in, as more retail comes in, there's going to be a desperate need for congressional or Senate guidance on this and give us some laws to work with and, some regulations to work with. We just, for the most part, we don't have it right now. We desperately need it. As the industry continues to scale, it's going to become more obvious to regulators. Well, the Senate and Congress, we need this.
Yeah, I think, one thing, that really opens up the door into, insurance in this industry. Insurance is a massive, massive beast in general. You've seen a couple things. You've seen evolution of insurance on digital assets. You've seen the cost of insurance of other products go, up over the past few years. How has all this been playing out in the digital asset space? What's, when you and I worked together back in the day, it was still early, very much earlier. So I think things have matured quite a bit since then. But yeah, would love to hear your perspective.
Sure. Another great question, Sean. So, as the digital asset blockchain industry scales and grows, the associated exposures that they're going to have grows with it. So as people are holding onto Bitcoin, whether hot wallet, cold wallet, warm wallet, if you will, if people are using smart contracts, if people are doing staking, all these new areas that we weren't even talking about 10 years ago. What was staking back then? What was a smart contract and smart contract audits? This is all new and evolving, guys. So as they evolve, the exposures evolve, and the insurance industry has to evolve with it.
Mm-hmm.
So, to your point, Sean, the industry right now is at the point where we are providing smart contract insurance to address exposures with smart contracts. We are providing insurance for slashing events and for people doing staking, if God forbid they get a slashing event, right? Those things didn't exist not that long ago. But we've had to grow and adopt. The good news for the insurance industry is there's been a lot more capital deployed into insurance so that we have new insurance companies evolving and taking on those risks now. And that's helped a lot with the terms that are being offered to people, the insurance terms, with the pricing that's being offered. So the insurance industry is evolving with the digital asset and blockchain industry, which is good news.
Specifically on that, so it sounds like specific events, that, our like listeners can connect to insurance products, is actually something that drives a lot of these new products to be rolled out, like specifically like smart contract risks. So like Wormhole just, launched their own token a week or two ago, and they had a massive attack, I think smart contract hack, like maybe a year and a half ago. Was there anything that you guys saw out of like Terra Luna, situation last May, where it's like, hey, we're going to insure against algorithmic stablecoins, or we're not even going to touch that?
Yeah, well, okay. I mean, algorithmic stablecoins is just it's a non-starter in the insurance world. That's very simple. But I think, Jody, to your point, what the insurance industry will do is they will look at smart contracts. They will look at protocols, companies using protocols in various smart contracts. But they're very smart about the insurance companies now. What they'll say is, hey, we'll insure you, but we want to see a couple of quality audits completed first. Not just one. We want to see several and make sure that these audits are being conducted by reputable companies in the space that are providing these audits. They want to see that first. Otherwise, it's a non-starter. They're not going to touch smart contracts and protocols without first verifying that these protocols are rock solid when it comes to their own security and the smart contracts. That's a starting point right there. And algorithmic, we're not even talking about that anymore. The industry's moved on.
That's good.
Yeah, moved on.
So Jim, would love to hear your take. We just talked to, we're talking to industry leaders, every single day for the most part, and would love to hear your take because we've heard like pretty different opinions in terms of where the state of like CBDCs or the digital dollar is occurring. I know this is your personal take here, but would you said some interesting things last time that I'd love to bring up in terms of like realistically, will CBDCs exist? What will that look like? And, how far out are we? Is it 10 years out, 20 years out? Is it never going to happen?
Yeah, great question, Avi. CBDCs are a very interesting and unique project, right? Because along with the use of a CBD comes some sacrifices. And what I'm saying is the following. A CBDC will mean that everybody in, may say, a particular territory or a country or wherever, they're all using a digital dollar. Now, some countries in the world are already using digital dollars or CBDCs. It's out there. Some countries in Africa are. Some of the Asian countries have rolled them out. China's using it right now to a degree. So CBDCs are out there. The Federal Reserve of the United States has gotten together with MIT and done something called the Hamilton Project, where they developed a CBDC. Word on the street is it's been developed. It's all the bugs have been taken out, if you will. It's ready to be deployed. My personal belief, my concern with the CBDC is the following, is that there is absolutely total lack of privacy when you're using a CBDC. And until someone shows me otherwise, that's my firm belief. And my fear is the following. Let's say, if you look at what Canada did with the truckers, they went and they went to their finances. They went to their banks, their or whatever bank accounts they had, and they seized them, right? They put a hold on them. And that was done without a CBDC. That was just the Canadian government decided one day, we don't agree with these protesters. Peaceful or not peaceful, we don't agree with them. We're going to go after their financials and hurt them financially and stop them. Well, what's to stop the U.S. government from doing to us? That's the same thing to us. What if in the United States we're now forced to use a CBDC? And if the government says one day, you know what, Knox, I don't like your credit score. I don't like the fact you've been buying alcohol or tobacco or engaging in this particular behavior. We don't like it. We're now going to limit your use of the CBDC or what you can do with the CBDC or what you can spend it on. That's a concern I have. If you use a CBDC, the government sees every single transaction you've done with that CBDC. And I think the big thing to be careful of is that when you look at technology, anytime technology is being advanced, that it's better for us, it's more efficient, it's cheaper, whatever the use of it may be, and whatever the support for it may be, if it comes at a cost of your personal privacy and freedom, you have to question that technology and say to yourself, is this technology worth using given the sacrifices and the privacy that I'm now going to lose?
Yeah.
And I think a big issue with the CBDCs is they've got to convince people like us that our privacy is secure.
And it's really interesting coming from the insurance side of things because, I have a kid now, got life insurance, right? And thinking your example, like if I go to the bar and have a drink, is my next month life insurance policy, is that going to be a little bit higher now because I have a little worse liver, got something like that? It is really something to think about.
Well, it's a great point, Avi. And it's a balance. You want life insurance, but the insurance companies who are going to underwrite that risk they have to protect themselves as well, and they have to do their due diligence on that risk. So that there's a balance there. You want the life insurance, they'll give you life insurance, but to give you life insurance, you have to give up some of your privacy. All right? But you have that ability to negotiate that. Right? You can decide, I don't want the life insurance. When you go to a CBDC, you don't have a ability to negotiate. This is it. You're forced to use a CBDC. You don't have the ability to negotiate and say, I'll give you some of my information and withhold other. And that's a concern.
That's a good point.
Yeah. I guess, Jim, on the side of just on what you're saying with like corporations in the conversations that you're having, you don't need to name them specifically, but you mentioned earlier just around like, requiring smart contract audits to really be able to underwrite a policy. What are some of the drivers that you've seen to, needs of, having, certain levels of policy in place? Is it, the companies that are issuing ETFs? We just spoke with Bitwise. You obviously have Coinbase as a, institutional custodian. You also have like the third parties that are needed, to get SEC approval, so they want to see this ecosystem. They want to see this package, for approving them back in January. Is that a big driver? And maybe what else is kind of seeing big drivers to say, hey, we need to go talk to Jim and get a policy in place?
Yeah, thanks for that, Jody. When it comes to me personally, it's about risk and transfer of risk to insurance product. So I have multiple calls daily with various clients, companies looking to address their own exposure, their own risk, and say, hey, we're not comfortable with this risk. We don't want to take this on. Now, that could be risk involving if they'll actually have custody of digital assets themselves. It could be if they're employing massive amounts now of AUM with staking and they're concerned about a slashing incident. It could be if they're massively have a lot of great concerns about a cyber attack. And will they be shut down? And will ransomware be deployed? So now they're going to have to pay out 40, 50 Bitcoin to get up and running again. So the good news is that, for lack of a better analogy, after the FTX debacle, a lot of companies took a step back and took a hard look at themselves and their exposures and their risks and said, hey, we want to start addressing this in a mature way. Not act like a bunch of cowboys and we're running at $1 million pace. We're scaling. We'll get to corporate governance later and compliance later. They're looking at that now early in the process. And I think what's driving it is serious investors want to know, what's a company doing about compliance? What are they doing about corporate governance? How are they addressing concerns with the regulators? So there's a number of factors driving this, but the smart money that's coming in right now in the space, they're pushing compliance or corporate governance and things like that maybe were not so hard pushed a few years ago. So
Yeah.
That's what's happening. The industry's maturing. And along with that, the maturity, comes a deeper dive at their own risk transfer and how they want to address their own exposures.
Yeah.
Yeah. No, absolutely. The thing that I was going to, sorry about that. The thing I was going to say is, you're seeing a lot of banks, that traditionally had gotten into supporting digital assets. Now you're starting to see them, pull out of that. How is the insurance industry looking at that? Like, is that net negative for firms looking for insurance, or is it impacting it at all? Just this week, I forget the name of the firm, but there was another one. I think there's been 2 or 3 so far this year that pulled the plug and said, forget it. We're not going to service digital assets. What have you been seeing on your end on that?
Yeah, it's a great question, Sean. It's kind of it's kind of sad in a way, and here's what I'll explain to you. We saw the Silvergate and some of the other debacles happen a year or 2 ago, and that really dried up the capacity for a lot of our U.S.-based companies in the digital space to bank.
Yeah.
Right. What I have seen is there's been a significant growth in offshore banking. So I'm personally helping banks in Cayman, in Bermuda right now, who are either in the process of obtaining banking licenses or they've obtained the license, right? And a lot of the American companies, US-based companies right now, are looking offshore for that banking help as opposed to in the US. Now, there are some banks in the US that they do use, But I've had clients here in the U.S., banking clients who were in the digital asset space. They got in about 3, 4, 5 years ago. Either they're pulling out completely, or they're still trying to figure it out. Whether it's the Wyoming speedy laws, whether it's other iterations of that, the industry here in the digital asset space, the bank industry, is not thriving for various reasons. The regulators have not embraced it. The OTC, others have not fully embraced it. Or if so, they're putting restrictive guidelines there in which to operate. So the net effect is the banking here for digital assets, it's not scaling, it's not growing. Rather, it's going offshore. And I think, guys, that's emblematic, not just of banking, but of the industry in general. How many companies do you know personally that are going offshore? They're going to
Yeah,
Dubai right.
it's not just on insurance at all. I mean,
Yeah.
look at every product you use. How many things that used to be made here in the U.S. they're now not made in the U.S. I mean, it doesn't have to necessarily be a bank. I mean, cars, where a lot of cars made, Mexico. I mean,
Well,
there's something to be said, not just, and that's not just labor, that's also the regulatory side and the amount of oversight that all these firms need, so, but on the flip side of that, Jim, is has, there has been some good things, one being obviously the ETF. Has that kind of counterweighted what you've been seeing, the ETF launch on Bitcoin?
it's a step in the right direction, Sean. Um, the approval of the SEC's approval of the ETF was definitely a step in the right direction. Um, will we continue to see further, advancement in the industry like that? Time is going to tell. Again, the regulators are going to regulate, and I think let's park the regulators aside for a second. Getting back to our earlier conversation, we need the Senate and Congress to step up massively and start providing guidelines in which the industry can operate. And without that, we're just going to see baby steps here in the U.S. in the industry as far as advancement. Look how long did it take to get the ETF approved, right? And qualified custodians is a whole nother issue. We don't have to go into today, but that's had its challenges, right? So it's baby steps here in the U.S. And I think other jurisdictions, they're going to outpace us, because they're not being hamstrung. They've got the regulatory and they've got the legislative guidelines in which to work, and they're advancing. We're lacking that.
Yeah, you really can't stifle innovation. The U.S. historically has been leading the charge in a lot of innovation, and you're seeing some of that come back with like the CHIPS Act, and hopefully that that whole thing happens. But as we're coming from the blockchain industry, it's this lack of clarity is just killing off. It's not killing off the industry as a whole, but it's really just stifling us from becoming that leader that we should be. Really in the space. Coming back a little bit to what you guys are doing, I just saw something pretty fresh off the press here about 4 hours ago that you guys just completed like a blockchain pilot, I believe, in partnership with Copper. Can you touch on that a little bit?
Yeah, it's a great development, and it shows the advancement of Aon in the industry. What we're trying to achieve, very simply, is to modernize the insurance industry to catch up and be, say, more interactive with blockchain. So what we're trying to do in a perfect world is we're trying to get to a state where the insurance policies one day will be on blockchain. The insurance policy that you purchase one day will be in the denomination of a digital asset. It could be a Bitcoin, it could be Ethereum. So what you're seeing, fellas, is, as we talked about before, as the industry matures and scales, we're seeing the technology being embraced now by the insurance industry. And that's what we're doing, right? We're trying to advance the insurance industry, that we're trying to make things more efficient, quicker, and more user-friendly for our clients and things like that. So that's what you're seeing, Avi, is, imagine one day when you have insurance policy, it's all on blockchain. And the claim is paid on blockchain. Yeah. And, everything now is on blockchain. It's coming, guys. It's evolving. This is what you're seeing. It's baby steps, but this is what you're seeing. You're seeing even the insurance industry start evolving now, moving with blockchain.
Mm-hmm. Now, as a big, massive company, I mentioned, 50,000 plus employees, usually the big boys can sit at the table, with on the Hill in DC. So do you guys have like teams that are constantly, you guys can't make decisions and overnight change them, right? Like everything, when you work at a big company, things are very slowed down. Again, you're probably at the table with some of the folks in DC. Like, I don't know how much you can share about that, but before you guys make any massive decisions, are you guys touching base with the folks in DC?
Yeah, what I can say, Avi, is that we are, obviously we're advocates of the space, the industry. We do have people that do interact in Washington, D.C. with various legislative bodies and legislators to educate them on the industry and to advance the cause, to advance the industry and move it forward. I personally have spoken with the CFTC. I personally have spoken with various regulators throughout the world, whether I've spoken to them in Bermuda, in Cayman, in Canada. So, we are very active, and we want to ensure that the insurance industry, as it evolves and grows with the blockchain and digital asset space, that we're in lockstep with the regulators to make sure that, we're all on the same page and we're moving it forward. So, we're involved and we're busy in that area.
Yeah. Jim, I think you kind of brought up a really cool idea of just what the future is moving to in insurance. Do you see a world where smart contracts are going to be able to handle, these, insurance claims and be able to handle, say, payout, where instead of, paying for a bill yourself, sending it to your insurance, from the doctor, it's a couple $1,000s, and then you're waiting, a certain time period for approvals. Do you see it where it can massively shorten that time gap?
Yeah, it's a great question, Jody. I do. Do I know exactly how it works? No, I don't personally. But I can tell you that there is strong efforts being made to put the entire insurance process on blockchain. And there'll be efficiencies there. The beautiful thing about blockchain is it's transparent. So several parties can be looking at this. You obviously have to monitor that carefully to make sure that what's being shown is appropriate and the right parties are seeing the right information. But I see it happening, and not just insurance industry, guys. There's a lot of talk now about, let's look at banking. Let's go back to that for a second. There's a lot of talk about the whole SWIFT payment process. That's going to be going onto blockchain, right? People already, I know right now, are making efforts to absolutely replace the SWIFT process with banks, put it on blockchain right now. That's being done. So it's just not even insurance, guys. Whole industries are going to be pivoting and moving towards blockchain. The whole tokenization of assets, it's been talked about for years and years, guys. And I think just now in the last year or two, it's really starting to get some legs and some traction. And we're starting to see now more companies really start adapting, tokenizing assets and start using it. And that's coming. So it's really exciting times. A lot of the industry right now that we've been talking about for years, it's happening, when it comes to digital assets and use of the blockchain space.
Yeah, it's a funny dichotomy, right? It's like, as we said this on the last podcast as well, but just like everyone that's not in the space thinks, the blockchain is so private or anonymous. They're thinking back at like the Silk Road days where, people are buying drugs and things like that, right? When in reality, it's quite the opposite. Everything is pretty transparent, as you just mentioned, and on the blockchain. So I guess when it comes to insurance and when it comes to like things that you do, going back to the previous conversation around like privacy, how do you guys ensure, is there certain blockchains that you guys are taking a look at that, not the Tornado Cashes of the world, obviously, but like something that can kind of block people from knowing that, my health history, for example, or things like that? Like, how do you guys tackle that? And is there certain chains you guys are looking at that can accomplish that?
So it's a great question, Avi. So obviously privacy is key. So there's going to be public protocols, public blockchains. There's going to be private. So, the industry will adopt and will adapt to requests for private information, what wants to be kept off public, knowledge of public blockchain. So yeah, you're going to see public and a difference between public blockchain and private blockchain and various uses of that, and, protect privacy. I want to get back though to the comment we were just talking about, the evolution of certain items. We mentioned tokenization. Let's look at NFTs for a second, right? When NFTs first came out, we were talking about a number of the uses, mostly for this art, and some crazy prices for art and things like that, right? And then, NFTs escalated for a while, but they seem to have pulled back a bit. But what I'm seeing now is, you think about the basic concept of NFT, right? Non-fungible token. What's its purpose? What's its use? Like, its perfect use is a one and done item. And if you think of various iterations of how NFT could be used, you talk about ticket sales for tickets, titles, right? Various iterations of what can be used once. It's got a singular identity to it, used once, and that's it. And look how we've evolved, because I know now, speaking with companies right now that are using and getting into NFT space, using it for sports tickets, right? Using it for invites to different events, different parties, if you will, concerts, titles to company, titles to land, and titles to real estate. That's coming. It's happening. And what I love about this industry, why it's so exciting, guys, is like this is happening right now in front of us. We're seeing basic industries change. An audit. Do we need someone to do a title search on a property going forward? If that title is right there in blockchain, you can see every use and transfer of that title on the blockchain.
Yeah.
So if you think about it, it's really changing industries right under our feet, guys. Right in front of our eyes, things are changing.
Yeah, and I think it's like, to that point, like this is something I've said too, like, it's how fast can humans adopt the change. That's what the problem that I think we've run into is technology is here. Now, we've seen iterations of technology, especially on like the wallet side and, things of that nature. And Jim, you kind of touched upon it, the qualified custody. We've seen the theatrics around that front. We don't need to go into the details. But that being said, I think it's really about like people are going to see it first and they're going to see NFTs. They're going to be like, oh, this is cool. But then they're going to be like, kind of like the spark wears out. But then as time goes on, people start looking at it and like, oh, actually there is something here. Kind of, with what we've seen with, I read an article, it was a couple weeks ago, about people don't think the meme coin thing is just a fad. They think it's actually going to stay and turn into kind of like a new, if you will, sector in the space. And it makes sense because we're a huge speculatory. We love speculating as a culture, I think.
Right. Well, Sean, I think what's going to happen is I think our hand is going to be forced. Here's what I mean. I think there's going to come a day in the future where you want to buy a ticket to an event, could be a concert, could be a sporting event. Fine. Here's how you're going to do it. Whoever you purchase from is going to be transferred to your wallet, right, on your phone. And it could be either from a reseller, or it could be directly from the event itself, the promoter of the event itself, right? But
Yeah.
I think a lot of this is going to be kind of forced on us to a degree, right? Like because of the efficiencies that you talked about. It's going to be a lot more efficient for the sale, the process of this ticket, which basically will be an NFT, to have it go from their wallet right to your wallet.
Yeah.
And not change several hands, and every time it changes a hand, someone gets their piece of the pie, commissions on it. It's going to be very direct, and this is going to be forced on us. We're going to, you're going to have a wallet on your phone. I don't know if it's going to be MetaMask or whatever variation it's going to be, but you're going to have a wallet, and this transaction have to be done directly with your wallet. And I think that's where we're going.
We'll have to get Ticketmaster on here to get their counter to that one, see what they're thinking on that.
I guarantee you, they may be considering. Who knows, Sean? But I think this is where it's going to be. Where we're going to be forced to adopt some of these measures in the future.
Oh, for sure.
Mm-hmm.
Yeah.
Yeah, I think go ahead, John.
No, I was going to say, I think it's good. Like, real quick on that ticket topic. Like, I was just looking at buying some tickets for my daughters to like, I don't know, one of their girly, singer concerts that they wanted me to go to.
Yeah.
No, it was more like a little lower than a T-Swift. T-Swift is way out of my price range.
It's like 10
Bitcoin
Ether
needs to go up.
Yeah, we need Bitcoin like million, and then I can get there. But no, with regards to that, like the amount of fees, like it's no different than all the other things that that these digital assets and blockchain is disrupting. Is the intermediaries, the amount of people that put their fingers in the cookie jar and just want, oh, just little for me, and you see this constantly across everything, and I just think it, I think you're going to see a decrease in that as a result of the true transparency.
I think you're right.
Yep.
And maybe it brings costs down too, Sean. You're paying less people in the chain.
When was the last time that happened?
When you look at like iBuying, even thinking about, like Open Door, for example, like could that exchange of the house basically happen over an NFT where you kind of cut out realtors in a sense. So it will be fascinating to see. And I think like I keep hearing this over and over and totally agree with it in the sense of like blockchain will really take off when people don't know, that they're even using it. Right. And same thing, like when I Venmo someone $1, I'm not like, well, what's that technology look like underneath? Like I'm not thinking of that at all. And I think once we get some applications, which they're already starting, but like if the world could be Robin Hoodized, if that's a word that I just made up, but like in the sense of how easy it is to buy stocks or fractional, like that just has opened up the floodgates to a lot of new investors. And so the same concept could apply here, where I think like if you create something that's super easy, it's under the hood is all the blockchain technology, but from a user perspective, I think that's when we can reach ubiquity where it's going to be something that everyone's going to be using without even knowing it. So
Avi, I think you're spot on. And I think a large part of this is generational.
yeah,
I think when you look at the younger generations, people in their teens and their 20s and 30s, they are much more apt to use this technology that we're talking about than, frankly, somebody my age. I think generationally, it's going to speed up because as the younger generation grows up, matures, and they embrace this space and they work with this technology, whether it's forced on them or not, right? It's just whether they have to use it because that's what's being, pushed in front of them or on them. It's going to speed up quicker and quicker, right? The older generation who has not used technology, they don't embrace it as much, they're not comfortable with it. That's going to eventually fade away, guys. And this younger generations that are coming up, they're embracing this. They are, I'll tell you right now.
I used to be in e-commerce, and I always said like the same thing. Like COVID actually kind of accelerated e-commerce and everything because no one wanted to go to the stores anymore. And so, your generation, my parents were forced to go out there and start using e-commerce, right? And so I don't know if it will be some black swan event that like accelerates this, or it's just, generations growing older and being born into it, right? If you look at kids nowadays, they're like way faster than I am on the internet, and I'm in my 30s, right? So it's interesting and fascinating to see, how these next generation, Sean, your kids, my kid, will grow up in this environment. So it is
Avi,
fascinating.
Great point you raised. Let me go back. Let me connect a couple things we were just talking about. You mentioned Black Swan event, and earlier we talked about the CBDC. One scenario where I could see a CBDC being deployed across the board, we all have to work with the CBDC, is a Black Swan event. And what type of Black Swan event? A financial one. So let's just talk a bit through. I personally think the rate at which we're sustaining our national debt is going to be unsustainable. Mathematically, it's going to be unsustainable, and a day may come where we wake up one morning and there's a declared national emergency because our debt is so over our heads. It's reached a point where we cannot pay it back. It's unsustainable. So what would happen? Maybe a situation like that, the government says, hey, listen, this whole fiat system we have, it's no longer working. But we have an alternative that's going to save us, CBDC. Yeah. And to make the CBDC palatable for you, we're going to give it to you at a discount. Here's your wallet that you must have.
I think I like Jim.
And in this wallet, we're going to put a CBDC, but we're going to put it at, you had it for every dollar you had, we're going to give you $1.10.
Yep.
$1.20. We're going to make it palatable, so that's actually a good thing for you. Now you're making more money by this transfer of fiat to CBDC. Guys,
I can see it starting with even like welfare programs, or like starting to like break it down a little bit, and maybe they start giving some digital dollars to welfare programs, or different sects of the U.S. Right,
and they already are.
Interesting. Yeah, I think they actually already are.
Everything's
and then
on
they
a
can
card
start
now.
monitoring that specifically. We actually talked to a guy a while back about them doing that with Indian reservations, and they were saying that they wanted to monitor and see if they're buying alcohol or what they're doing. So it's these like Black Mirror episodes that we're living in right now. My friends think I'm a crazy person, but they're very not far off.
Guys, I'm not saying this is going to happen, right? I'm not saying it, but I'm just projecting. If we know for a certainty, a mathematical certainty, that our debt will hit an unsustainable point, right? We know that it's a mathematical certainty. Well, what happens? What are we going to do? And I'm just laying out maybe some potential scenarios what might happen. I hope the guy
you just press reset.
Well, I hope it doesn't happen, fellas, in my lifetime or my children's lifetime. And, big concern.
Yeah.
I have 5 children.
Gosh.
What world are they coming into? What are they inheriting?
I have 3 daughters, and it's probably the scariest. I was just down at Disney World, and the cost for a ticket at Disney for one day was almost $200 a person. And to that point, like when we were growing up, you had amusement parks, you had all kinds of stuff, and then you think, oh well, let's build all this other stuff, entertainment. It's unsustainable because all of that's being built. Then thinking one key thing that you need, liability insurance. Well, that's been going through the roof too. So at some point, as this is going through the roof, all of our debt's going through the roof. I mean,
well, the issue too, Sean,
something's going to have to happen.
It's kind of a well. If you look at Disney's in Florida, right, guys? You look at Florida, property insurance market has been destroyed by all the the catastrophic hurricanes.
Yeah.
I think
I did that the other day.
So a big part of your ticket you're paying for, Sean, you're paying for some property insurance, with Disney World, because I'm sure they have some hefty premiums paying for their own property insurance in Florida right now.
Yeah, I was talking to a guy the other day. He mentioned lives in Miami. He has like a 1,800 square foot unit, so he pays $1,600 a month in association dues, and the reason is because of the amount of the cost of insurance, because no one wants to insure any property down there.
Well, California, I know, had pulled back a lot of property against,
Farm
I think
just
it was
left.
like fires, earthquakes, all the craziness there. And it's where you buy Home Depot stock and close your eyes.
And Jim, quick question, just on the corporate side, you have someone like MicroStrategy just hoarding Bitcoin, becoming a Bitcoin hedge fund. And, people talk about like, all right, more companies are going to be adding it to their balance sheet. We spoke with Bitwise, and they publicly like posted their Bitcoin address. We know in El Salvador, Bukele published the government's Bitcoin address. What are some things like you need to think about insurance wise if you're saying, hey, we hold a lot of Bitcoin. It's maybe with a custodian, but like, is there something MicroStrategies, like a policy they're talking to you about of like just mitigating some of that risk?
Yeah, it's a great question. When it comes down to custody of digital assets, it's a 3 C's you have to look at: who has care, who has custody, who has control. The insurance companies typically will look at that in providing insurance to people who have custody of digital assets: who has care, who has custody, who has control. And you've got to look at those elements. So if you do hit one of those prongs, if you're holding on to keys, and they could be shared keys, right? But if you're holding on to keys of these digital assets, the wallets that contain the digital assets, then you've got to look at the exposure. What's the chance these assets could be stolen under my watch, under my care, custody, control? I can tell you it happens all the time. I'm sure you're not surprised.
Yeah.
There's been some really significant losses in the space. And it's become a real concern, guys, a real concern for everybody across the board. And there are companies out there, insurance companies, that do a really good job providing coverage, whether it's hot wallet coverage, whether it's what we call cold coverage, meaning it's in cold storage. There's an insurance called specie insurance for cold insurance. A while ago, there was a terminology, warm insurance, warm wallet cover. That's if somebody was using like MPC technology, they're using keys and the keys were shard. From what I'm seeing, the industry is kind of pivoting away from that and considering that more on the hot side now versus cold. But it's a great question. If it's a brave new world, and if you're holding on to these digital assets, man, you got to be careful. You got to be careful, and you got to protect yourselves, because I can tell you they're coming at you.
How do you guys? I guess is the last question here. In an industry that's so new with so many unknowns, obviously insurance has million actuaries that are diving into this, but it's not like health insurance where you have decades and decades and decades of historical data. How do you guys go about thinking about the Tornado Cashes of the world, or something that's new and innovative, and hackers are using new techniques? Like, is that just shown in the premiums are much higher, or how does that work in terms of mitigating some of that?
Yeah, no, I wouldn't say as regards the premiums. I think the way I respond to that is that we have to be thought leaders in the space, right? And how do you do that? You become thought leaders by you take a hard look at the space. You talk to a lot of people in the industry. What are you doing? We talked to people who were coming up with doing lots of staking years ago. And we talked about staking. He said, well, what are your concerns about staking? He said, well, Jim, we can get a slashing incident, right? And we took that back and we analyzed it. We thought about that hard. And we spoke with other people in the industry. And we said, fine, let's get some thought leaders in the space from the insurance industry. Let's get them together and say, guys, here's something called a slashing incident. If this does happen and these companies are penalized and they suffer a loss because of slashing, how can we protect them? Are you comfortable laying off some of that risk onto insurance product? We did that with slashing, guys. We're thought leaders. We did that with smart contracts. You looked at smart contracts. Hey, if there's a bug in the code or a bad actor outside manipulates that code, and now you got a loss in the smart contract, how can you address that? And we went to insurance companies and underwriters said, are you comfortable understanding this risk and transferring it to an insurance product? Take that risk on your shoulders, for a cost, for a premium. So it's a number of things, guys, but you got to be thought leaders in the space. You've got to understand it. You have to talk to people and try to understand what are the risks that their inherent risks. What are some of their exposures? And can we kind of take that off their plate and put it onto insurance product at a cost, right? So they can sleep at night. But you've got to be thought leaders, guys. You've got to get out there, analyze the industry, speak to people, understand it, and then see if you can transfer some of that risk, to insurance company for a cost.
Mm-hmm.
That's really it.
This has been a fascinating conversation, Jim, to say the least.
Trying to make insurance, interesting, guys, and exciting.
I get it.
Yeah, you bring up a great point. One thing I'll say is I personally had a very close call with some stuff about 6 months, like 5 months ago. And, got into one of my computers. I didn't have the UB keys or any of that. I was this close to, yeah. What I could say, and then of course, for the first time, I decided, let's read about the insurance policy they have. Yeah. What I read was pretty much the paraphrase, you are screwed if it happens. You're not getting anything. Pretty much.
That's why we have insurance, guys. We want to transfer that risk onto an insurance product and take it off your shoulders. That's the whole idea.
Yeah,
love it.
Well, thanks so much, insurance, Jim. You hit Jim up.
Exactly.
Yeah.
So, pleasure speaking with you. Hope to see you out here, and thanks again for coming on Blockfuel Podcast.
Yeah, pleasure, guys.
Yeah, thanks, Jim.
Take care of yourselves.
Thanks, Jim.